Right, let's get it. Welcome to weekly outlook. So today we're going to look at, the pair that we basically trade, right? And what we will expect this coming week. Which is going to open midnight tonight. This is the second week of the new month. So we are going to look at the monthly time frame starting. What we can see here is that an old low was created. After we swept the old low, we have an old high like this. This is Euro JPY. This is the monthly time frame, and we have this previous month high and low. So what happened here when the last month, which was February, we closed this right here. So you see price gapped up, opened right here. We first of all sell down before buying up. So basically, in the real sense, this is like a low, a high, a low before this high occur now. Whenever price gapped, it takes a lot of volumes to move like this. So that means there were buyers that moved this market higher, then sellers took it down a little bit before continuing going higher. So basically, what we are looking at is for price to keep buying, at least to take out this high, or the closest point of interest that we have within the price action. So what can we see on this pair right now? We already identified previous month's high and low. We now took out the previous month's high as a form of liquidity. The monthly time frame, what we can see is that we have another old high and another old highs. So those are draw on liquidity. Previous month candle, we have taken the high, and we also have old highs and old highs. They are draw on liquidity. So for we to see a clear direction, because we took this low as well, old low, before this price started moving higher. So for we to see a clear direction, we have to move to the weekly time frame. On the weekly time frame, what can you see in the weekly time frame? We have a high that has been taken, and remember, this is still a point of interest that price just moved in again the second time. The first time we moved in, what do we see? We sold down to seek the external range liquidity, or the opposite liquidity. Let's just call it that way, anyhow you may understand it. So this is basically price move. Oh my god, price move from here down, then we move back into this area. What is this area? Point of interest. And what do we do to seek the external liquidity? High and a lower low. So now this high now becomes an old high that price moved towards again to seek the old high. So on this time frame, what we can see is we have a low and a new high right here. So this is our price action now. Remember, this point of interest is still much valid. We don't know if there are more orders left here. So price may want to return here. Price may want to return here and probably sell back down and continue going higher, because In the higher time frame, remember the higher time frame, we have drawn liquidity, these highs and this high. So any point of interest within this higher time frame point of interest, we will be looking at them for them to reject price, so that price can move from that point of interest to the other point of interest in the order flow that we are currently following right now. So the order flow that we are currently following is basically a bullish order flow. Why? Because in a higher time frame perspective, we seek an old low, so we expect the opposite liquidity to be seek, which is these old highs right here. Any of these old highs, we expect them to be seek. This as well is an old high, but which is also very closer to this one right here. So I mean, if you want to identify all your old highs or old low, it's fine like that, but you can literally see them yourself on the chart. So now the current order flow we are following now, like I say, is a bullish order flow. So in this bullish order flow, what do we have? We have a range. What is this range? This low to this high is our range. And remember, this high moved back into a point of interest. So because before price moves, Ali will need to move from somewhere to somewhere. Basically, this point of interest could be the one that will probably push price back down and continue going higher, or after seeking this high, then we can see a push back down before going higher to seek this high. Either ways, anywhere you see a confirmation, then that's your trade opportunity, and you know the next place to target. So in this case, what do we have? We have this candle right here. Remember, I say now we are now following bullish order flow. We seek this low, we create a high and a low. So this candle is very important. And remember, this candle as well is imbalanced candle. So we need price to give sellers fair price, at least move this price down and continue going higher. So our work here is to identify where price may likely move back to before continue going higher, if we want to continue going higher. Because for us, we are just here to trade. Anywhere we see our opportunity, we act. So we know that this is a point of interest. We moved in before, we sold down, now we moved back in again. So moving back in, what did we do? We basically seek this high. What is this high? Liquidity inside this point of interest. And now, what do we have? We have this area. This is a balanced market. That means there was like a lot of buying and selling right here before buyers took this market up. So there might be order left here, on-field order, just the same way we might have on-field order right here, that price may collect to move price down, whether inside this body or into this area, and continue going higher to seek the opposite liquidity of the higher time frame, which is the perspective we do have. Higher time frame, opposite liquidity, those highs. Now, going into the daily time frame, what do we have in the daily time frame? What do we have in this time frame? We have area that we have already identified. This is a very important area, one. As well, we have a fair value gap that has been created. Right here. A fair value gap that has been created right here. And remember, this little thing that you see here is a low. So what am I trying to explain to you guys right here? This is a fair value gap. What is it? A point of interest. This low is liquidity and it's a point of interest as well. So that means our weekly range, remember, is from this low this low right here to this high. Whether you want to fib or not, we have the discount and the premium right here. But every point of interest in this market, they are very important. They tend to hold price, or price tends to react off those points of interest one way or the other. Either they will react off that area to push back to another point of interest that was left to continue going down, or they might push price to seek what again? Liquidity. So every point of interest in this market are very important. As a trader, all you need to do is once price gets into that area, you will start looking for your opportunity to take a trade. And it has to be on a session, because that is when that trade is very valid, especially when you are trading the currency pairs. So it has to be on a session. That is when they are very, 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 very much valid. So now,
You're talking about when you say session, you're talking about like
London
GBP would more
session, New
likely
York
move in
session.
London session. Okay,
Yes, those are
okay.
sessions where you need to be looking at price, especially when they move into that point of interest in that session. So that is when you want to be looking at price, or prior to the session, like before the session, just hours or 1 hour or 2 hours or minutes before the session open, look where is the price right now. Let's say London session is going to open in like 2 hours, right? So price now
Mm-hmm.
move into this area, and you know London session is going to open in 2 hours. You want to be looking at the setup that is going on right here. It could be that price has now moved into a higher time frame point of interest. Now, before Asia session closes, a setup will form. So that setup will basically wait for London session to now mitigate that area that move price higher. That is how market works. We might move into a point of interest prior to any session, then that setup will form. Then as soon as session opens, price volume now kicks in, price now move back into the setup and move away. Or when session opens, price will move into your point of interest, then create a style for trading for you, then you can enter all of that area. So it's always these two things. Before session, either price will set up for you, or during session, price will set up for you. It's just that two things. That is how market works. Before the session, price will set for you, or as soon as session opens, price will now set up for you. Is that two things. So now we have a fair value gap right here, a low. This low hanging, this low that is hanging around here could be a low that will be swept into this area before price will continue going higher, or we might just sell down. But what are we looking for? What are we looking to trade? Are you looking to hold the price all the way down? This is 200 and something pips, for example. Into this area, this is around almost 300 pips. We don't know how much it can move down. So let's say price move into this area right now and create a setup for you. At least you have a direction. You can target this high, and whether you close partial or everything, or you just, it's up to you. But like highs and lows are very good area to target. But this is the daily time frame, like I say, and we already identify our point of interest, a fair value gap, and this higher time frame other block balanced area. So you also know that when we created this high and this low, we now broke it, so price haven't returned into this area. Whether you want to mark this area out like all of this body, but the most important thing is within this whole area. So it's within this whole area. If we go to the daily time frame, this is the 4 hour time frame, I mean to say. If we go to the 4 hour time frame, what can we see? in this 4-hour time frame. Remember, this is the fair value gap from the daily, and we have low right here and low as well before this fair value gap. Let's see the 12 hours to see what price is doing. Price move into this fair value gap, 12-hour fair value gap, and price is now moving higher. So coming into this new week, this low and this high, which is the this is the previous day, which is Friday. So what I'm seeing right here from the 12-hour, either before we moved into this area, we want to see probably price run this high and move back into here or here. It could happen like this for sure. It could also happen because our order flow is bullish now. It could also happen that price may just move back into this area before continue going higher. Either this fair value gap or this area before continue going higher. Because what is this high? Highs are liquidity. So when price is moving from here or here, we're going to target the highs that are being created. So either ways, all you need to watch out for is, we don't really need this low because it's relevant to us. This fair value gap and this area is all you need right now. This fair value gap and this area. So as soon as price retrace back into this area or this fair value gap, or this demand area, then you can start looking for your setup to trade this market back up to target these highs. As you can see right here, the reason why I'm saying this is we created a low right here. We broke that low, and this is a huge displacement before that low was broken. So which means that this fair value gap that price is currently dabbling in is still much valid. Whether you want to extend the fair value gap like this, it's up to you, but you can just still mark it like this. So it's very, very much valid there, and this area, they are very valid. Very, very valid.
Okay, so if we have the fair value gap from where you first marked it, but it's still valid, is it because you're still waiting for it to come to the bottom of the candle?
Which bottom?
The top one right there where you have the mark, the
This
black, yeah,
one?
that one. Uh-huh.
It's not just because I'm still waiting for it to like come there, right? I'm waiting mostly like for the setup to occur, right? It's very valid.
Oh, okay, I see it now. Okay.
So for me, I'm waiting for the setup to occur, especially in session. So basically,
Okay, so wait, hold on before you move on. Go to the other time frame you were looking at, was it the 4 hour where you originally
it was the
marked it?
4 hour
Okay, so now you're on the 1 hour. Wait, go back to the 1 hour.
here.
So now you're where you have, I'm trying to move the screen with my finger. Right there where you have the darker gray at the top,
This one.
where your fair value gap, that's where
Yeah.
you had marked it. So can you like, um, how do you say it? Will you move your fair value gap since you're on the 1 hour to that last black candle?
This one right
And
here.
yeah, no, the next
Is
candle.
this one?
No, the top one. That one right there. Would your fair value gap be from there to that third black candle or no?
It does it, like I say, you can clearly see from this candle to this area is your fair value gap as well, right?
On the one
So
hour.
on the 1 hour, so it's all the same, whether from the 4 hour, because this is the highest point that market has
Oh,
traded to. So whether you mark
okay.
it out like this, it's still aligning.
On the
As
one
soon as
hour,
price
yeah.
moved in here, is your fair value gap.
Mm-hmm.
However you want to identify from the 1 hour, you can identify it like that.
Yeah.
It's just up to you. Once from starting from here, the same line right here is the fair value gap. So that is what matters. As soon as price move into there, you start looking for your setup, Like I
Okay.
say, if you also look at this area, the reason why the 4 hour is even much correct is because you see this area right here. Yeah,
Mm-hmm.
this candle traded down into this area, so it kind of like overlap this area right here. We call them overlap. It kind of overlap this area right here.
Mm-hmm.
So it's all the same. However, you want to like use it, but whether from the 4 hour is this, from the 1 hour is just the same thing. It doesn't really
Okay.
matter. Fair value gap started from here or to the top. So you already know that as soon as price
Mm-hmm.
move in there, you can start looking for your setup.
Okay.
So if you look
Um,
if you look at
you
this session
know,
right here, if you look at this session, let me explain something to you guys.
okay.
Look at this session. That is why we say we target the lows, right? So now look at this session. We have London session, right? This is the 1 hour. Then prior to New York session, after London session, what do you see? We run liquidity on top of New York session, right? And on top of London session, price move higher, then we now break down this price. What did we do? So we basically gave us a setup to trade from, whether from here or from the body, right? So
Mm-hmm.
I'm just giving you an example because it's the same thing every time. If you were to take this trade, so basically this was the low that was created before price moved into here. You can just take a trade and like target this low. That is why people always target the lows that was created. So this trade is like, I mean, this is like little pips or something, but from here to here is around 60 something pips. So you could have taken this trade and target this area, right? And again, if you don't want to do that, let me shade this out for you like this. You can go down to the lower time frame. So what are you looking for? You are basically looking for another opportunity to take this price probably back down from the
Mm-hmm.
lower time frame in this area, because price moved into this area. Now you are not looking for a lower time frame, like a setup to take this market back down. So if I let me see if I have a replay right here. Boom. Okay, I have a replay. So you see, go back to the 1 hour. This is the 1 hour. So this was the setup created right here from this body either to the wick. This was the setup created. So what am I trying to show you right now is this. When that setup was created right here, this is when price move into this area, and basically this is a setup as well. Let me take this one out. This is a setup as well for you. We have a high low, a high, a lower low, broken this high, and of course you can see this engulfing candle. So you could have just like probably target this low from here to this low like this. This should be your ideal trade, right? And if you play price like this, you can see price gave you a TP even before moving back up again. That is why it's always good to target your lows, close it, or you take partial and wait to see what price is going to do. This is just a minor trade. We're not looking at 5 minutes or something, because if you get a trade from the 1 hour time frame or 4 hour time frame, so you are targeting the low of that 4 hour or that 1 hour. So every time frame that you are on, you are looking to target the same lows that where you like from the time frame you took the trade from. So the higher the time frame, I mean, it's not going to say maybe the bigger the reward or the risk, but like you always target the same lows that was created on that time frame where you were looking for your entry from. So I can just, this one is finished. Now, like I say, we have, I can take this one out like this. We have this area and this, of course, this area. whether you want to mark out this last candle like this, it's all the same thing. You as a trader, you just know once price start to move in this high, by first of all taking out all of this high created right now, you can start looking for your setup. It could occur probably inside this area or when this high has been taken. It doesn't really have like it's just for you to look for the setup. That's what matters. Look for the setup within this range. So if price is trading higher and you didn't see the setup, you just wait to see where the price gives you the setup. All we are waiting for is the setup, but you already have your areas that you are waiting for price to get to, and this setup will always form prior to your session that you are trading or within the session that you are trading. And price taking the highs, all of this, they are basically, what is that? You are basically looking for session for a setup to trade. Price taking a swing high like this, you are looking for a setup to trade it back down.
Okay, so looking at the market the way you have it marked up right there. You're saying we're targeting the highs, right? Which is right there where you have that dark shaded gray.
We are not, you want to take a trade like this to target this area?
Right.
No. I don't want you to take a trade like that to target this area. It's okay. It could happen, but like, it's just like diving into a trade.
That's where I'm getting confused, because I'm like, okay, so I could mark up my POIs, like my highs, my lows, my order blocks, my fair value gaps. But when I'm looking at the market like this, I'm like, okay, where am I supposed to
Okay,
target
listen
first?
now. Again, when you get into the market, you want to look at, I don't know, you want to sit down and be looking at the market 24 hours. No. It's not done that way. If you are about to trade London session, you wake up an hour before or something, it could be 30 minutes, doesn't really matter. You look at price. Where is price at this moment? So let's just say London, it doesn't matter which session is going to open soon or something, and let's just say this is the current price, because this is the current price right now. I'm looking at current price, and where is the price? Price is right here, right? So for me to participate in this market, I want price to get into this area to give me a setup, or to take out this high to give me a setup, or probably move back down to give me a setup.
Okay, so we have the two areas marked up, but
You cannot just jump in this market. You
no,
want to buy
obviously
it.
not.
What about if it continue coming down? This is a point of interest. Or you want to sell it. What about if it continue going high? This is a point of
Okay,
interest.
so what we're doing is we're waiting for it to go either up to that
Or down.
or down. And then in that area, then we'll determine.
It's not about determining, because as soon as it move into this area and it gave you your setup, automatically you know where you are targeting. That is how it
Okay.
is. If you
So,
move into this area, you know you are targeting this high. Not even this point of interest anymore, because it's irrelevant at this point.
So I
Price could
think
only react in this area and probably pull back, then continue going high. It's not going to hold price to continue coming down. No. That is why price will never give you that setup outside of where price is going to hold. If it's not going to hold here, right here, this fair value gap, price will never give you a setup to trade this market here.
yeah, can I say something?
Yes.
'Cause I think I understand Anna's question, because I think I had the same one. So because maybe also you came in a little late, so we were checking on the higher time frame which direction we expect the trade to go, right? And then we marked up the POIs. So now that we moved down to the lower time frame, we're on the 1 hour, and we determined that either, because order flow in general is
It's
like
bullish.
bullish right now, right?
Yes.
okay.
It's bullish. So we're expecting for once the market opens in the beginning, it might just go up to that gray shaded top
Exactly.
part to either take out the high. And when you see the setup going, forming there, which should be either a 15-minute bearish order block or a 1
It could
hour
be 1 hour,
bearish
it could
order
be 4
block.
hours. You have to look at, we take straight from the 4 hour, we take it from the 1 hour, 15 minutes,
Okay,
it doesn't matter.
so we're looking for a bearish order block for it to go down and like tap into the fair value gap on the bottom
Mm-hmm.
because it needs
Uh-huh.
liquidity. It needs liquidity to push further up, right?
Exactly.
So, and if it doesn't do that, then it might just keep going further down into the fair value gap in order to get the gas, the liquidity, and there it should form
A
a
setup.
bullish order block, which is the setup. And then once we see that bullish order block forming and the setup there, then we can take it higher. Then we can
Okay.
buy. Did I
So
Okay.
understand?
basically now, I already share everything with you guys. I don't even know if you guys are even reading it, going to your chart, practicing it. So, like Effie said, to form a bullish order block, are you waiting for example, let me see something real quick. So let's say this is a bullish order block right here. This is the last candle that was formed, right? Did you see price came back into this area? Did you see
No,
price came back into this area?
no.
Okay, so I gave you guys everything. This thing they cost people to get, right? You guys have to read this. I didn't just share it because it's like decoration. I'm trying to help you guys here. I told you guys two things will always occur. Either a straight engulfing that price will reprice again, or a series of candle. In this case, you have a high, a low. What is this? A series of candle, 1, 2 candlestick right here. Anytime price is forming a setup like this, you will never see a straight engulfing candle. Like for example, this is a straight engulfing candle. Like when we form it down, then we form this straight engulfing candle. Something like this. You see, when price formed that straight engulfing candle, let's just mark that the candle alone. You can see price retested, even if we didn't maybe continue going higher or something. But you can see like price retested that area. How many times? And still moved higher. But look at this one. Price never retested, and it was not a straight engulfing. So basically, this is the whole area.
Yeah.
It's a series of candle. I wrote down that thing for you guys. Series of candle or straight engulfing, and if there is a fair value gap before that break, that's structural shift. Because in this case, this is a structural shift before price retests this area. If there is a fair value gap, maybe it was just a 3 candle formation before before the market shift, then you will see a fair value gap within. You can either enter off the fair value gap or the series of candle at the beginning. It's always like this. You guys should not get this thing confused. If not, you might think, oh yeah, maybe the strategy is not working or the strategy is not working. You have to know when to apply, what to look for at a particular time. In this case, there is no straight engulfing. It becomes a series of candle because it was a market structure shift right here, a shift in market structure. What did you see? A retest, then you do again, we moved away, even come back again to move away more further.
Can you put that on the 4 hour? I want to see what it looks like on the 4 hour.
In the 4 hour, it's
Okay.
still the same. Now, look at the 4 hour example. 1, 2, 3 candlestick. What do you see? A fair value gap within.
Fair value gap.
Like I say, everything you guys need to make money in this market, I have provided it for you. Whether you go home, you are just sleeping on it, or you practice with it, then to master it, it's left for you guys. This is a 4 hour time frame. You have a what? A market structure shift right here. You see this high? A market structure shift. This is a low, a high, a lower low, a higher high. This candle in between makes it what? A market structure shift. So how do you take a trade? Either you take it from here, the body, one, let's take that one out, or you take it from the fair value gap right here.
Okay.
It's your preference. Everything is in your hand. I've provided
Right.
everything. It's just your preference. You will choose which type befits you the most.
Okay,
Okay.
while we on EJ, I got a quick question because I know that EJ and GJ kind of move the same.
Similar, similar.
Which one of them make the move first? Because if I miss it on one of them, I know I can catch it on the
I
other.
think EJ is making a move, kind of whether first or later right now. But we're gonna go through the whole pair because on GJ is kind of ready to just take off. It's kind of we're gonna go through GJ as well, right? So GJ is kind of ready to now take off. So like I was saying, you can see whether in the 4 hour we take trade in every time frame. It doesn't matter. 4 hour, 1 hour, 15 minutes, 5 minutes, you can always see the same setup. You can take trade in any of the time frame. Do you understand?
Yes.
Mm-hmm.
So this is the weekly area, the daily area. You can see is daily and the weekly area as well. In the weekly, this is how it looks after a high has been swept. What is this external range? What do you expect price to do? Price to move back to what? Some kind of internal range liquidity.
So I have a question though,
So, yes,
Andrew. Can you
ask.
zoom out a little bit so we can see what's on the, no, the opposite. No, yeah. And a little bit more.
Zoom where?
Yes. And go like, okay. So remember when we said last week, we still have some lows to the left? Like this
Right.
one, this long wick in the middle, for instance, and the
Mm-hmm.
other one. Okay. So since we're at the beginning of the month, this candle that just like the last week's candle is the first candle of
The
March,
week,
right?
yes, yeah.
So it took out liquidity on the bottom of the weekly and of the top, right? So is it not also possible for it to actually take out
Keep selling
last
down.
week's? Yes.
This low right here has been taken as well, you know, right?
Mm-hmm.
Remember when I was doing analysis whether on this or GJ, I said it's possible to take this low, but this is the original low right here. This is the original low. I said it's possible to take this low, and we did take the low.
And it took, yes.
That is exactly everything I explained just happened. We took this low, we haven't taken this low. I said this low can be taken as well, but this is the original low. We might want to protect this low. That's what I explained to you guys.
So you think it's protected? Okay.
Yeah, you can leave it there. Thank you. Yes, ma'am.
Anna, did what I say was actually clear to you, or
Yes. Mm-hmm.
okay?
Yeah, I did come in a little bit late, but yes, that was very clear.
Okay.
When I was explaining EJ, GJ or something, I made sure that this is the original low. This low has been taken. This low can be taken as well. Just because we don't trade EJ, GJ is different. It moves different. I use GJ to explain it, but EJ has already taken this low. And I believe if this low has been taken, now it's time for we to go for these highs.
At the top. Yeah. So
Exactly. That is why, remember, price moved from one point of interest to another point of interest, right?
right.
Okay.
Right. And so
So,
hold on.
like,
So hold on. So where liquidity was taking for this week, the top, that will be still considered internal liquidity then,
This
yes?
one.
Yeah.
So listen, price need liquidity to move, right? And in every point of interest, there has to be some kind of liquidity. It is for sure. In every point of interest, there has to be some kind of liquidity. So now look, this is a point of interest, this one that I shaded out, right? What happened? Price moved into that area first. We move what? Down to seek what? This low and this low. Right?
Which is
What is price
external.
do?
Those are
Price now
external.
moves up to do what? To seek this
Internal.
high. Where
Yes.
is this high? In this
Internal.
point of interest. Right? So that means price may now have liquidity, enough liquidity to probably push price further down to now
And then go back up.
So now it has to go
continue
up
going
and seek
higher.
liquidity at the
Because
highs. Oh,
Okay.
to now keep on going higher because we have a journey to make. High, high, high.
Yes.
So
Okay.
this area, we venture hold price somehow to push price back down, either into this fair value gap or this area. Do you understand? That is why we have, let me take this one out again. We have a weekly range. We started this from a monthly time frame. Let me go back again to the monthly time frame. From the monthly, what can we see? Which is an old low that has been seek. Where is the old high, the opposite liquidity of this old low? This high and this high. You understand? This is the monthly perspective. So there is something so common, right? That if price seeks liquidity, we want to seek the opposite liquidity. You understand what I'm saying?
Yes.
So these two highs are the opposite liquidity of this low. Now, in the weekly time frame, remember, this is a higher time frame perspective, the monthly perspective. So from this high or this high, any point of interest, any POI that is within this high, price can only react off of these other blocks or fair value gaps. It's not to react to create a new low at this point. This is a low. This is a low. And this is a low now. It's not to create a new low from any point of interest standing in between these highs. It's not to create a new low. It's for price to react off and keep creating a higher highs and higher lows until the mission is complete. So any point of interest standing in the order flow, price can react off this point of interest, but it's not to create a new low. So where is our weekly range? From this high to this high, from this low to this high. That's what I say. And remember,
So wait, Andrew. So you're saying it will not create a lower low because it never took out the lowest low yet? Am I understanding this right or wrong?
do you
It didn't.
understand your structure?
I think I do.
This is a low.
Yes.
This
And
is
then
a
it
low
did.
again, right? This low and this high, maybe I should change the color.
okay, but that high that you just marked, that would be an internal high, no?
This low, right? This low and this high, right? They are, I'm not going to say like, superior, right? But like they are like semi-superior highs and low that price is trading in between.
Yes.
According to the higher time frame perspective, this low right here, this one right here, is the superior. Why this high right here
Yes.
is the superior high.
Yes.
So what is price doing? Price is now creating a lower lows, I mean a higher lows.
Mm-hmm.
So if price is creating a higher lows, that means price is about to start moving higher.
All right.
This
So
high,
mm-hmm.
there are highs. I can say they are kind of, market has opened or what? It looks like,
Yeah,
Yes,
time's
market just
going
opened.
forward, so
okay,
Yeah.
market is open.
okay. So this high and this high, I can call them weak highs
Mm-hmm.
because market now has accomplished everything that they wanted to accomplish. If you look at this market right now, look at the candlestick they are printing. I bet you in another 1 week, if you print another candlestick like this, in just 3 weeks, we can take out all this high that took like, I don't know, months to create. That is
Yes.
telling you that the order flow, where the money is right now,
It's
is the
bullish.
uptrend.
Yeah. Okay, so
So
basically because it did not take the lower low, it made a
this one
higher
right
low, and
here,
that
Mm-hmm.
yes. That was my
so
question.
this
So
is
that's
like a
why.
complete pullback now.
Mm-hmm.
Oh,
We
okay.
need to see another wave like this.
Yes. Okay, got it.
So if we see another wave like this, let's use this area for example, right? This area is not even valid because we didn't break any low. So I'm just telling you that where price might likely react again, like if you want to come down. So price might just react off this area. What is price going to do? Now will now create a lower low again like this.
Mm.
Now respecting where? This low.
Mm-hmm.
This low now, price is respecting it right here. If price take out all of these highs into this area, price always move from one point of interest to another point of. This is a higher time frame perspective. What is price will do? Price will now sell back down into this kind
Mm-hmm.
of area again,
Mm-hmm.
respecting this low. We now create a high to take out this high again, because this high is what we are aiming for right now. Like I say,
Mm-hmm.
Yes.
it's just a matter of patience, and you will see everything happens like this.
Okay, got it. Thank you.
So now, like I say, we have a high and a low of this new weak range. So within this low and high, this is where we are looking to take position from, either from this area back down, this area to the upside. So in
Okay.
this area, the downside, we have this point of interest. This point of interest right here. And in the upside, where could price react from to sell back down? Because price is already there either ways. Inside this area is where price can react from to sell back down and continue. This area is a level that price can what? Sell from to back into this area and continue going higher. So what is this? A high. And a high is what? Form of liquidity, a point of interest. So where is this high? Where is it located? Inside a bearish order block. You understand?
Yes.
And this area, our demand, bullish order block.
Mm-hmm.
In the 4-hour time frame, what can we see? what can we see in the 4-hour time frame? You have already
Fair
identified
value
your
gap.
higher time frame points of interest. So what can we see in the 4-hour time frame? Again, let me go to the daily. There is a fair value gap that price can react off as well. If price doesn't want to come down here, you know. And there is another block, there is a fair value gap. So you knowing, okay, we have areas where price can react off, you are good. You are good.
Oh,
Do you have a question or what?
I do. I'm trying to think. I'm probably gonna answer my own question. Okay, so now that I think we already went over this, but I'm gonna ask it again anyways, just because I want reassurance, I guess.
What is your question?
So you have that fair value gap right there, and that's
Yes.
based off the daily, right?
Mm-hmm.
Okay, so you're saying, okay, we have this fair value gap where it is a point of interest,
Yes.
but when you go to the 4-hour, your fair value gap is lower. But
Oh, you
right?
mean like he's not like he didn't mark up the entire fair
Well,
value?
because he was looking on the daily, which that makes sense to me. And I
This
guess
is
it's
a
just,
daily fair value gap, right?
yes, I see that.
So
Yes.
let's say your 4-hour fair value gap that you are trying to identify right now. It started from where? It started from where? From the same point where the
From
daily
that one,
started from to this
right
point.
to there. Yes.
So what is confusing? Like what is the confusion about right here?
Okay, so if I go to lower, let's say go to the 4-hour time frame, does if I move down to the lower time frame, which is what you're looking at now on the 4-hour, do I then eliminate that fair value gap? And well, no, because it's the fair value gap is
So
still
I
there.
know
It's at
what
the
is
top.
the issue.
Yeah.
I know what you are
Okay.
trying to
See,
explain. Listen,
you see,
listen,
I answered my own question.
listen. What you are trying to say is that because we have a 4-hour fair value gap now, so this one is not relevant, or is that what you are trying to say?
Yes, but technically, I
It's so
answered my
funny
Went
own
the
that
same
question.
that is
way.
why this is the reason
I,
why this is the reason why maybe you guys are not paying so much attention so much. There is thing that price does every time. This is fair value gap on the 4-hour. If I go to the 1-hour, there are fair value gaps here.
right.
Good. Now, as a trader, what did I say? You already have your point of interest, right? There is a huge chances that price will get here, it will not give you that setup. It will just run down into this area. Where is this area? Still
A fair value gap,
still a fair value gap.
but in the one
Now
hour, in the 4-hour, my
let's
bad.
go down to the
Sorry,
1-hour. Where is this same area? There is a fair value gap here.
right there.
You are not lost, neither you are missing out. Anywhere that below from here down that price gave you that setup, you are looking to take action, because
Okay.
it's so clear that this is the daily right here alone. If you go to the 4-hour, you have this huge imbalance. So why don't you think price wants to rebalance this imbalance? It's nothing confused. You want to see a setup. Do you just want to buy if price get here? Is that how you trade?
No,
Then you wait for your setup to form.
right.
That is the whole point. Price can move
Okay.
here, it doesn't give you that setup. It doesn't mean that this area is invalid or it's not a fair value gap. You have all that imbalance that price
Okay.
might want to fill. That is the reason why it's not giving you that chance to buy it up yet, because it want to fill that area before it will give you that opportunity for you to participate in the market.
Okay. Totally makes sense now. Okay. I get it.
You as a trader, your only problem is just for you to identify your key areas where you want price to likely move into.
Right.
So you let me go back to the weekly. Where is the candlestick that I marked out? This candlestick right here. How does it look?
Do what?
This candlestick is what I marked out, our point of interest, right?
Mm-hmm.
Now I want to go back to the 4-hour that you are talking about. There is a candlestick like that right here. Don't you think it's a point of interest?
Yeah.
Because I didn't
Yes.
just mark it out. I have my reason of not marking this out.
Mm-hmm.
It's a point of interest. So if you go down to the 4-hour, what is this point of interest? Is this huge
It's
imbalance?
right.
I don't just want to shade, like mark every area out in the market. What I'm trying to explain to you guys is that as soon as price crosses this line coming down, you will start to look for your setup. You will start to look for your buying opportunity. And if it doesn't show you that buying opportunity, what is the price doing? It's moving down more. And where is it moving down to rebalance this imbalance? You just have to watch it. Just stay, watch it. After rebalancing the whole imbalance, it will now give you that chance for you to participate in the market. If you are chasing this price, then that is when you will get caught. You are looking for area. You will wait. You already have the area. So you want me to mark out this point of interest and this point of interest like this? So is it not the same as price moving in, as like you looking at it at the 4-hour fair
On the
value
1
gap?
hour. Yeah.
It's the same
Exactly.
thing. So there is no
Same
need.
thing.
Just price moved past this area, then you will look for buying opportunity with all this range.
In the lower area. Okay.
And if you look at the 4-hour time frame, right, we have a break of structure and we have a pullback into this area, these two consecutive candles that we use to move price higher. It's being mitigated, right? This is the 4-hour time frame. So the other one that hasn't been mitigated is basically from here to this low, which is this also shaded area. But I don't just want to mark it out because the higher time frame, which is the weekly, still show me there could be a potential move back into this area. A lot of orders are still probably pending here. That is why I just shaded this area, because I know this area is valid, this thing is valid. And if you go to the 4-hour, you can also see this area that I marked out is also overlapping this fair value gap a little bit, which means it will also make sense if price just tap into here. It's already mitigated. That's all. It doesn't have to come all the way into this area before you give you that setup. As soon as you tap into this shaded area, it has already been what? Mitigated. It cannot give you a setup to buy. And what are you talking about? This is same fair value gap. You understand what I'm saying?
Yes, I understand.
4-hour fair
Yes,
value
I
gap here to
understand.
here.
I mean,
Daily
that
here to
was a
here.
very good explanation. Like I was telling you, I sometimes get like confused or lost or whatever, but like just from jumping from the higher time frames to the lower time frames because of the fair value gaps on like on the lower time frame, but this made it very clear to me.
So you have a 4-hour fair value gap. That means price can just keep what? Moving like this. It's just all the same thing. All you need to do is like wait for that session to happen.
Okay.
Or
Yeah, it makes sense.
it can just pierce the line and then go to,
That setup will always form.
yeah.
Like I say, that engulfing will occur and all of that. This is a trade here, right here. This one is a trade opportunity. So what is this? Right here. we have a 4-hour area. Show you right here, fair value gap. And of course, we also have this candlestick right here, balance market. So as soon as price moves in, this is the 4-hour time frame anyway. Candle, 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 candle. Until this candle engulfed this candle and broke like a little, is not a complete structure, but like as soon as we engulf, because it's two, either engulfing it or break shifting market structure. This is how price move back into this body. And where is your target? The high. Where is the market moving from? So this is basically from here to this high. A tradable opportunity that occur. You can do it like this, and your TP will get hit. Why? Because there was a level right here. All you need to do is always wait for that opportunity to happen. So if you look at this market in the 1-hour time frame, what can you see? This is Asia session, because this is irrelevant. This was the Friday movement. So we have Asia session, what? A high, a low, a high, a low, and we broke this structure.
We broke the high,
right here.
broke structure.
So basically, you now have this area, right? That you want price to move into. Where are you targeting? This high, because that is where price is moving from, back into this area. They will target that high. So this is what I'm trying to explain. Those setup will always form. What time did you see the setup form? It formed prior to session, right? But what time did the price mitigate that area? Session.
New York.
It's always like this. All this trading of a thing, you will always get them from the session. All you need to do, two things have a wait for price. Price will definitely move into a point of interest prior to session, prior to like any session that you are trading, and it will form that setup. Or during the session, price will form that setup, the setup, because it has already traded back into a point of interest.
Okay.
So following this order flow right now, there is a fair value gap right here. Price can just move in this fair value gap and just continue going higher and probably take out all this high, and you will now see during London session or something, price will now set up to want to pull back down.
Yeah, that's what I was just thinking.
So it's all the same, all the same. I saw this fair value. I think GJ also have it or something. I saw this like this, but for me, I don't really care because I'm just waiting. 1, 2, 3 good trade in a week. I'm fine, you know. So price will always present the opportunity, either moving here from here like this. Then you know where to target in the high time frame perspective. All these highs is where we are going to target, and that will give you a huge profit. This is almost 500 pips if price could move into this area. You are not targeting this high anymore, or this high. You are targeting this overall because that is the higher time frame perspective. Do you understand?
So I have a quick question. Market is open now. Is it because did you get like is there a time change or something that I'm
Yeah, I
not
think.
Yeah, we had time to move forward.
Yeah.
for springtime
Normally,
today?
price open around this time every 9 o'clock my time, 9 p.m. my
Yeah,
time.
for me
So
it's 11 o'clock. So
But
before it should be
our time sprung forward on Sunday morning.
yes,
So that's
yes, yes,
why.
yes.
Yeah,
oh,
on this
Is it like a
morning.
what is it called daylight saving or whatever they are?
Daylight savings time.
Yeah.
well
So
yours
it's
is
always like
early
this
this
every
year, is it?
every year.
But yours is early this year or no? I feel
It,
like usually it's like end of March or something.
like April,
Well,
April.
it usually happens right before spring, and spring is what, the 20th or the 21st, the first day
That's
of
what I'm
spring.
saying. Like it's too early. Just
Yeah,
like,
I agree.
anyways. Okay.
Mhm.
Sorry, Andrew,
Yeah. It's
but
okay.
I agree, Effie. I think it's early too.
Yeah, I was
Mhm.
confused. I'm like, okay, what are they talking about? And then I see, yeah, the market is open. Why?
All
Okay.
right. So this is what we have on EJ. So we're going to look at GJ now. Like I say, we have a bullish order flow. You have to put that in mind. A bullish order flow is what we have. So you know what you are looking for right now. So if you are, for example, just selling this price and you think, oh yeah, we're going to, you know that this order flow is bullish. So you want to be looking for buyers more than selling. Do you understand?
Yes.
So this is for EJ. You already identified the point of interest. And now back to uh, what is it called? GJ. I might have to delete all my this thing anyway. But it doesn't really matter. We can do this. You see how GJ move? This is divergence, right? Like this. This is divergence. So Euro JPY is taking all these lows, but GJ doesn't take them. So there is like divergence anyway, but we don't want to go into that one. But everybody has their pair that they are trading. So, and this is the weekly time frame for GJ. Like I say, this area was still very much valid. It's where price moved in, then moved away, but we failed to take out our low. So it's respecting that low. And back in, we are just pulling back down a little bit to probably continue going higher, which is very nice. So if you look at this area, what do we have in this area? When we moved into this area right here, then we now move higher to break this high. So which means this area right here is all your area. So has price moved in? Yes. 1, 2 candlestick have tapped in. And what did you see? When price moved in, we took this low to continue going higher. So for me this week, I was expecting price to tap into this area, move back down into this area, and continue going higher. That is why you see I marked out this area like this. A liquidity sweep, a high was broken, a shift in market structure. So this area is basically what? A fair value gap from what? The 1 hour. That same fair value gap was there on the EJ chart right now here. That is why I say price can move there and probably target this high. So it's the same on the EJ chart. You can see price gapped into that area. And plus, when we take out this low, we have a shift in market structure. Where is the other block? Right here. Plus your fair value gap. So I want to pay attention because most of the time there are like many times once price open like this, it tends to give more opportunity. Imagine you taking a trade from here right now to target this high. This is almost 200 pips. You might be even done for the week. Because this area now has now been mitigated. But on EJ, it hasn't been mitigated. So it's good that price market has opened while we are on this what is it called? On this meeting. So I will be paying attention to this area. That is why you see I said alert in this whole area. So I will see what happens right here because I'm looking to buy this pair. I don't know if he wants to come down more because of this fair value gap in this whole point of interest right here. That can also happen. Fair value gap. That is why we always want to wait for session because taking a trade from this kind of Asia session is kind of dodgy. So if, for example, price now moved into this area in London session, then I'm looking to buy this market up all the way. So this is just like we have like how many hours? Probably like 8 or 9 hours, even 12 hours before price will definitely move into this area, or before London session, I mean to say. So we have a lot of time. But the same analysis on GJ, we are looking for buys opportunity. But if you look at this area from the daily perspective, we have this area that price has already mitigated. Price can also come back there. It's not like it cannot come back. It can come back as well. So even if you want to use this candle, did we tap in? Maybe a little bit. Yeah, we pierce in a little bit. So, but yeah, I'm looking for price to probably return back into this area, especially this area right here, the fair value gap.
Wait, Andrew, go back, please.
What do you
Was it
see?
the 4 hour? Where did you put your blue line? On the doji or on the black candle?
Which blue line? This one?
No, the one you just moved.
Doesn't matter.
You were
This is
you were
all the
checking
body of the candle. Is that not the
so
body of the candle?
of which one? The black one or the
Of the
green
black
one?
one right here.
Ah, okay. That was my question.
Mm-hmm.
Because I was looking at the black candle too. Yes.
Hold on. I saw you taking the chair. Where are you taking it to? Where? Chair. Yeah. Like this. You were carrying the chair. Where are you taking it to?
No, it's not a shirt. It's like for putting my shoes on. But it's from my friend. She just gifted me this.
When? Today?
Yeah, she just gave me this.
I know, today or when?
Yeah, no, today.
First of all, what is your room number?
It's just
Okay, we will talk about that. Hold on. You know, we don't allow furnitures anymore. He brought like a chef.
No, I didn't bring anything. My friend, I got a friend.
It's the same thing, bro. We are talking about the same thing. There is no more furniture in the building.
What? I mean,
we don't allow furnitures in the building anymore. Yeah.
I mean, I don't bring anything here, but she said to me, "Do you want this to put your shoes?" But she just gave me this like 5 minutes ago, and it was in her room. And she has like 2 years here.
Oh, it's okay.
So I know. Okay. I don't bring anything here.
It was not from outside, no?
No.
Okay.
No, I mean you can see it. I just it was.
It's okay.
Okay.
Yeah.
216.
Yeah, 216.
Okay. Thank you, man.
Yes. So, like I was saying, it's the body of the candle, so it pressed in. It doesn't really matter. But yeah, like I said, this area could be valid because it's a fair value gap from the 1 hour. Price can likely return into that area. If he wants to push down more by sweeping, because this high and low are basically a balanced area, right? So it's a lot of market participants right here. So it's either we sweep the high or the low. So this is going to be an accumulation phase. So total power of 3, right? So it could be like this accumulation phase, then the manipulation to the downside, then before we continue the expansion to the upside. This is a clean accumulation phase. So we have to watch what price is going to do around here. Like I say, that was basically this was basically last week. We have this area right here that this was the setup. If like before market closure, then price was still moving like this, then yeah, you could have taken this for continuation to the upside. But this is a new week. It's a brand new order flow that is going to occur right now. So we just want to see what price is going to do, because you can see now Asia session price has moved into this area, so it's like kind of irrelevant for me because I want to trade London session or New York session. So if price doesn't like come back here in London session or New York session, then there is no trade for me. It probably just continue going higher. Then I'm fine if it just moved away from Asia session. So that means I will now be looking at all those highs for me to be able to probably sell price back down or somewhere. But my own preferable setup, I want price to move down first. This is my own like idea of trading like this JPYs, especially this week. I want price to move back down and get my setup from here in any session to carry this market upward. Any question?
No.
The GJ and EJ is basically the same now, right? They're just moving back down for you to get opportunity to buy this market. So you already have area identified, So all this low, they are just liquidity hanging in this point of interest. So once price moved back into this point of interest, swept these lows, you can be looking for opportunity. It could be the opportunity will be from here or just still within this range. It doesn't have to move into here. So it's just the same thing for me. Like very easy to spot. Once price moved there, then you're looking for buying opportunity. That's all. This is just EJ and GJ. This is basically the same thing. And the gold. So let's see gold. Remember, price moved away from this fair value gap right here. So we still have up to seek. Hold high to move into. But price haven't gotten to that high. So this week, we have inside bar. It's a balanced area. Inside bar. So this candlestick always tell story. We might just sell down, then continue going higher to sweep the low, then continue going higher. This is the weekly time frame. We don't know what we have right here. Or we might just sweep the high, then retrace back into this body, then continue going higher because price is moving from here. So this low has to be protected. We don't care if we sweep this low or this previous candle, but this candle low has to be protected somehow on gold. So if you go to the daily, now what do we have on the daily? On the daily time frame, this is previous week high and low 1 2 3 4 5. So we have this area, right? If you want to mark it out like this, literally we haven't taken out this high anyway. This one right here to like confirm a shift in market structure, but still we are still okay with that. We have this area. This price did mitigate this area and moved away, but there is a huge probability that price might also sell back down before continue going higher. In the 4-hour time frame, what do we have in this area? We see how price has been respecting this area, fair value gap, and this area of demand to go higher. We complete the wave on this. We mitigate this area. We moved higher towards seek this high. We completed the wave. So now, what else do we have? This low that is hanging right here, plus there is a little gap with this low, and there is this candle right here. right here. I don't know how much further gold might make other into this area, or we might just respect this what this whole candle, because in this time frame you can see there was a shift in market structure right here, which means from here like this, which price already tapped into, was our area. But at the same time, if we have unfilled order right here, so where would price likely move into will be
I have
this
a
area.
question.
Yes, keep on.
You say this low in the middle.
This one
The
right here,
no, the one above. That one.
this
No, the
one,
one where you put the gray,
what happened to the low?
Why is this okay, so the candle before it has a lower low than the black candle. So you're just considering the black candle because that's the opposite candle before the
I'm
upper
not just
low?
considering it. This area as a whole, right? This area as a
Mm-hmm.
whole is
Mm-hmm.
area of interest. Whether you marked out the whole candle like this, is area of interest.
So it's
The
the same
most important thing, price has already tapped into this area.
with the black candle.
Whether the black candle, all these are all balanced area. So you know, before this imbalance occurred, this displacement,
Yes.
this area has enough liquidity for buyers before they move this market higher. So it's just an important area for you. Once price moved in here, you will start looking for your buying opportunity. That's the most important thing. As soon as price moved in here, you start to look for your buying opportunity. With me and Rose took this trade, after it was after our session. When was that? On, I don't even know. Me and Rose, we took this trade because price in the 15 minutes time frame right here, this is what price did. Price moved in, boom. We break this area, shift the market structure. So I know price wants to move back into this area. Gold is the only thing I can trade off session, because it moves in every other session. So what happened? You can still see before price hit TP, because the TP was this high. In New York session, price also returned back into this area before it moved away to hit TP. That is why you see there is no even point for you to rush into a market, because if that area is valid, price will always return back in your section, in that New York or London. It's always like that. So what happened when price moved into this area? I also have this fair value gap identified right here.
Okay, wait, but you're a little bit too fast. So can I just see what you said, what you had earlier? Was it the 4 hour or the 1 hour?
It doesn't. This is the 15 minutes time frame right here. This is the high, this is the low. Then we shift the market structure right here.
Why you can't just show me the 4 hour? Because I'm lost
What
on that
happened
one
to the
chart.
4 hour? The
I'm
4
trying
hour
to
is just
mark
like
up my
this. I
chart.
showed you this is the
That's
area.
it.
This is the area we're looking at. And price
Yes.
moved into this area. Let me take this one out. Price moved into this area right now.
Mm-hmm.
So it was that day. So this is where price moved into this area. I was just looking at this. Okay, the price action that price was making when price moved into that area. So
Mm-hmm.
I saw a shift in market structure, but probably you cannot see it. I know what I'm looking for. This is the most important. I'm looking for buyers. I'm looking to buy this market up. So I'm
I
paying
see.
a lot of attention to what the market is doing. I saw a shift in market structure, a fair value gap right here. And of course, this area, this whole area is a point of interest. Even if price moved in here after a shift in market structure, we are aiming for this high. This is the most important thing. We are aiming for this high right here. Price moved in here, it moved away, didn't take out this high. It's so much value that we need to aim for this high. So what happened? Price open in Asia session. You see how aggressive this candle is. I want to see liquidity being grabbed aggressively like this. What was my area? Okay, there is a fair value gap that hasn't been mitigated like completely. Okay, it could be that area. As soon as price mitigated this area, what happened? I start to watch price. You see this candle, as soon as price engulf right here, either this series of candle or this one, because this one in this case it engulfed this candle straight away. In the 5 minutes time frame, look right here. I told Rose, oh, look at the 5 minutes time frame. After we move into this fair value gap, look at what happened. We immediately engulfed this candle. I say, okay, look at the 5 minutes time frame. Look at what happened. It doesn't matter if it's moving back and forth. I know we are going higher. You can still see the same point of interest right here. And if you look at it in the 15 minutes time frame perspective, or it doesn't matter, let's say 15 minutes perspective or something, you can see if you want to use this series of this candle like this, because we broke this structure right here, it's a little high, you can just extend it to this area like this.
So when did you enter this trade?
We enter off Asia session and we just allow it to run. The high we were targeting.
Okay.
So now, this week, what are we looking at? We have this area marked out, and of course, shift market structure, this whole area is also an area. So, but yeah, I know gold is probably going to continue buying either ways, but still, if market managed to move back into this area, it will be opportunity, a good one to buy gold higher, because we still have this high to seek. We have this high to seek. So we are just waiting for that opportunity to present itself. We are not going to rush it. We are not going to rush for it. You know. So once that opportunity presents itself, you can put it here like this on the 1 hour time frame. Once it presented itself, then we take advantage on the trade. We are just waiting. There's nothing to rush about. Just wait for price to set up. In Asia session, you might just see price move down crazy drastically, because you can see this highs has been run right now and these lows are still intact, because once we run this high, we never come to run the overall high. So these are just liquidity pool. Price is just running liquidity up and down right now. So probably price will come back into this area to run this low, and this is not even far away from this point of interest. So I wish price will just move back into this area, then we can look for buying opportunity on gold, because we still have our direction here, this high. After this liquidity run, you can see this candlestick high, then a low. How does it look in the lower time frame? Didn't really break and close below it. So it's kind of irrelevant. We just wait for price to trade throughout Asia session, London, to see what happened. But we already have our point of interest identified. If price wants to continue going higher, okay, but we are not going to jump and rush into it.
Yes.
This is basically gold.
Yes, thank you.
You are welcome. And GU, what do we have on GU? Let me I need to take out all of this either ways. I can take this one out. Doesn't matter. So this is GU, right? This area is 1 monthly area, and on the weekly time frame, order flow is what? Bullish. In this area, we have, I can take this one out, but it's just all the same. We have this area right here that has not been mitigated. The price just moved in. And knowing that this order flow is bullish, Where would price likely to move to? Move back here and probably continue going higher. What is this place? These two consecutive candle, they are other block that price hasn't repriced yet. This area, we did have a mitigation, a breaker block right here, this down candle, that price repriced. You see, when we moved higher, we broke this area. This green candle repriced this area to continue going down. So this breaker block has been mitigated. We have used it. So it's really relevant. The other ones are now this candlestick right here that has not been mitigated. And of course, this area that price is currently on right now. So just like I'm expecting on the other, pounds currency, I would like to see a move down. A move down. This is a huge imbalance. A move down back into where this area. Because if you look at this area, we have what? A balanced area right here before this displacement occur. And this balanced area, before we moved away, there was a fair value gap that price moved into before it moved away right here, this fair value gap. See, as price moved into the fair value gap, we moved away. The same way here, we created a fair value gap right here, and of course, your demand area as well. So a fair value gap plus demand, then we moved away. So I can take this one out. And now we have this area of demand. You see this whole area like this? If I marked out this high right here, I want to show you something again. One, this is a shift in market structure. So where are the consecutive candles? These three candlesticks. So if I mark out, like for example, my zone, you can see this black candle and this green candle tapped in here and moved away. So all this thing is something that you just have to be paying attention to. But apart from you looking at all of this series of candles, price also showed you another thing right here, a fair value gap. So all these things over time, you guys will understand them, like all of these things, how to use them, and when price moved into them. We always think that, yeah, this is the last candlestick and this is your other block. That is where price will definitely move back to when we break this structure or this structure. Maybe later, but price is moving in some direction. So why does price have to move into that area right now is the question. So you as a trader mark your point of interest out right here. And of course, what is this? You see these two consecutive candles, because this low was broken right here. This whole area like this is a point of interest. This was a low, high, low. Now we broke it. So either ways, they are both serving the same thing. They are here for the same purposes. Whether you mark these two candles out, or you just identify this candle right here. You can see my line. Look at where I set my alert on. Right here. There is a reason for that. See, it's below this. It's above this area. There is a reason for that. I can move this thing right here up, but it doesn't really matter. It's all the same. Because if price is going to come here or press more down into this area, so it will definitely trigger this area. So once price move into this area, then we are looking to take further notice, at least to aim for to clear this high into this area. That is our next objective on GU. If we can see that kind of pullback, for sure, then we are taking buys to where? To clear this high into this area. And how many pips would that be? We are talking about 300 or 400 pips. It can be made with this 1 week. just wait for session. Your own goal is just to wait for session and look for setup during session. This is an area. So what is this area serving? It might serve as a point of interest that is going to push back, price back down. So which means inside this point of interest we have a high, previous week high right here, which means price can just run this high, and in London session we will see that setup to come and continue going higher. The daily time frame, this is what we have on the daily time frame. So we're just waiting for setup around this area anyway. You guys have any question?
No questions for me.
Okay. And the 4-hour time frame, remember this is the previous week high. And this one. So if it happens that price, what happened right here in the 4-hour? Before market closure, I took what is it called? GU buy. But I closed it anyway before market closes. So what happened right here in the 4-hour? Let me explain something to you guys right here. So I saw a high created, another high low, then we break this area. What do? We created a fair value gap right here. Oh my god, what am I doing? Right here, this fair value gap in the 4-hour time frame, like this, plus this series of candlesticks, that the body or whatever. I took this buy, moved all the way, then I just closed it before market closure anyway. Almost off session, so it was okay. This is it right here. Let me show you guys. Hold on. This zone is just too big. That's why I use lines. So right here, when price moved into this area right here, this was a high that was broken right here. As soon as this high was broken, we have what? 1, 2 series of candle. These two candle broke this high. So basically, like this was the entry. As soon as this black candle retest, I just took this trade all the way. But I just closed around this area anyway because I wasn't really looking to hold this trade all the way, because I'm thinking price will return back into this area or this area this week somehow this week. So I don't want to get caught like on this buy and price started retracing or something. This was just a quick buy. Yeah, hold on. So is there any question before we end the meeting?
No, thank you. Not from me.
Yeah, so like this area is just a point of interest. We are looking for price to react up and probably sell back down into this area and continue buy, because let me just say the pairs that we are trading, the GBP pairs, they are bullish. GJ, GU, they are bullish. Even gold as well is bullish. So whatever we see, we are looking for buyers opportunity. It's just for you to identify your point of interest. So if there is no question, I think we are done for today.
Yes, thank you.